All right, well, welcome to Cost Accounting. Our first order of business is that we're going to be looking at some basic cost concepts here. And, one thing that is unique about the what we discuss in cost accounting, but really is something that is can be expanded to all of accounting, is this idea of the balance sheet accounts, um, measuring movement through those accounts. So for instance, for for the accounts receivable, you would have, you know, money coming in. So this would increase or debit. So let me just merge these cells and underline here. And so we'd have an increase or a debit here, when there's a sale on account, and then we would have a reduction here when we would have a collection on the sale. And so basically, this is what we'd be discussing here is like, so we would have typically we'd have some sort of beginning balance and then some sort of ending balance. And so then if we were to add these two cells here, this is what we would have. So basically we would have uh, revenues to account for, and let me wrap that a bit there. And then when we have collections on account, so we take the beginning balance, add the sales, subtract the collection account, we get the ending balance. And so then this is revenues accounted for. So it's, a bit of a, a bit of a mathematical issue or whatever, where it's maybe not the most grammatically sound to account for and accounted for. But this is something that we're going to move forward and discuss as we get into cost concepts. So, so in our inventory accounts, as you know, for managerial accounting, we break these accounts up into three different stages. And so first we have the raw materials. And so this is something that will be what we use to build into something else. So following the accounts receivable example, we'd have our beginning balance. And then so any increase in raw materials would be known as a purchase of raw materials. So if you're given information about purchases throughout an accounting period, that's going to be the debit or increase in the raw materials account. Of course, we have the companion ending balance here as we had for the accounts receivable example. And so a reduction in raw materials would be when it moves from raw materials into production. So this would be materials issued into production. Now, there might be some other examples or terminology that your textbook might use, but basically, this is what we're accounting for. Is we take our purchases, add those to what we had in the beginning, and then see what requisitions there have been in, so that materials would be pushed into the production process, and that should give us our ending balance. Or of course, if we have these two and the ending balance, then we know what would have been requisitioned. So this would be raw materials to account for and raw materials accounted for. So we're taking these we're taking these steps here because this is something ultimately that we're going to be dealing with when we move into our Chapter 6 material on process costing. And so I'm just giving you a preview of the whole accounted for and to account for and accounted for, both from a unit standpoint as well as from a from a dollar amount standpoint. Okay, let me stop here so that we don't have the videos be super long here.